many of us in the investment bank business look at the organizational structure differently. But for today's discussions, I like to cut them into two very simple lines of businesses. Either you take risks and you're in the risk-taking business, or you're in the advisory business, right? So for those of us who are in the sales and trading world, or we call ourselves the markets business, global markets, sales and trading, institutional client, all mean the same thing. So this is the risk-taking side of the business. Or you're on the advisory side of corporate finance, the fee income, and they are the investment bankers. Traditionally speaking, that's the investment banking side of the business. But if you look at the numbers in 2011, Deutsche Bank's revenue from the markets or sales and trading was about 11 billion euro, which accounts for 83% of the total investment bank revenue. That shows you the balance of power. That's the balance of power. Now, the first 9 months of Goldman Sachs results, these are all public information, and the public information indicate that 81% of Goldman's revenue in the investment bank comes from sales and trading. They call that securities business, which is about $14.5 billion. And within the sales and trading business, there are so many ways you can organize this global markets and sales and trading business. What I would like to try to do is to look at them from 3 different ways. Like we said, there are 3 different ways to skin a cat, but let's just look at it from a product angle. If you look at the different products within an investment bank, within the global markets business, there are only 2 product divisions. One is equities, the other one is FICC, in a product sense. In the equities team, either you are in research, sales, trading, or in prime brokerage. And within the research division, generally speaking, you are categorized by your industry sector. And it is a very specialized business. Obviously, if you are in consumer finance, you analyze companies such as Ford, BMW, Sasa Cosmetics, P&G, or G2000. You don't become an analyst or research person for telecom overnight. This is similar to just the specialization in a hospital. If you are in property, you sell, you trade, and you also broke ideas in property companies. With the exception of probably 3 different distinct teams within the equities world. Equities world is very microeconomic driven. We look at the different industry sectors. The fixed income world is much more macro. In the equities world, prime brokerage, equity derivatives, and equity capital markets, these are the 3 distinct teams that cut across all the different industry sectors that we mentioned up here. Prime brokerage currently is mainly catering their businesses to hedge funds. Hedge funds who basically park their assets with a broker. This is just like our personal account. So if you have a brokerage account with either Sun Hung Kai or maybe HSBC, you keep your assets with the broker and they give you a statement. They can lend you money. They can also let you trade stocks on margin. Equity derivatives, that was the department that I was in for a number of years. We cut across all the different industry sectors. And there's usually a dedicated sales force. There's usually a dedicated trading team. And there's also dedicated support function for equity derivatives. Equity capital markets, as most of you know, is typically a JV, a joint venture between the equities team and also the advisory business, the corporate finance team. Now moving on to the FICC division, another name is the debt division, meaning the fixed income side of the business. This is a much more global business. Each one of these little description here is a profit center. So you would be either on the precious metal desk, that means you trade gold, you trade silver, and you trade palladium and all the other metals, or you could be on the interest rate desk, and you'll be trading the US dollar interest rate, the euro, yen, or all the other currency. Or you're on the G10 FX, so you will be trading the spot currency of either euro, yen, or pound sterling, or different currencies. And the DCM business here, the debt capital market business here, is similar to the equity markets, equity capital markets business in the sense that it is a JV, it is a joint venture between the advisory side of the business, and also the risk-taking side of the business. That's how you cut it by products. And as I said, there's no one way to cut it. The second way to cut it is by function. Functionally speaking, you may be a salesperson covering the institutional side of the business, or you can be a trader, trading either proprietary book, meaning for the firm, or you can be a client flow trader, trading for client flow. Or you are a structurer. Structurer is actually a new position, I think, since the 1980s. Before that, things were much simpler, and there wasn't a need to actually disassemble or assemble different risks together. But structuring has become a very key function. Research, I think, is very straightforward. We divide that into different sectors and also different countries. Now, there's a very important role within the sales and trading business, and that's the business manager and also the COO role. The chief operating officers in a business manage many of the different business managers for each trading desk, and they ensure the very professional administration and the operation of every desk. Salespeople are too busy selling to their clients and talking to their clients. Who is going to handle all the internal T&E and administration and a lot of the compliance issues? A lot of the responsibilities are managed by the internal business managers and also the COOs. And apart from the functional divide of a bank, increasingly you also see that banks are organized along the geographic lines. So here, I think we're very familiar with the Asia Pacific region. Our region includes the Japan and also the Australian businesses. In Europe, the big region is called EMEA, Europe, Middle East, and Africa. The Americans region is obviously USA, Canada, and also Central and South America. This is just one simple way to look at the three different ways of organizing an investment bank. So if you are a salesperson, you have a product boss. If you sell equities, ultimately you are accountable to the head of equities. But since you are in sales, you also have a functional boss. So the global head of sales is also somebody that you would report to. And if you are located here, then your regional head is also going to be your manager. So this is not just a matrix organization, this is a three-dimensional organization, right? So the more bosses you have, I think the more important you are and the more valuable you are to the firm. And in a very micro sector, I think structure, these are the different roles and responsibilities. And here I like to play a very short video also. And this video is about the lives of three different currency traders. William Wong in Hong Kong, and also one guy in London, and also a hedge fund manager in the US. That's what traders do, a prop trader. But there are also many traders who facilitate client flows and work with salespeople. I was responsible for a sales team, and salespeople provide advisory services to clients. Obviously, salespeople also manage the client relationships. And as a salesperson, you would also need to know your client firm's organization, their trading history, or the different issues. And unofficially, a lot of the salespeople also provide market intelligence. So if you're a salesperson working for JP Morgan, I think you can expect your boss to come to you and say, so what do you know about the deals that our competitors are doing with our clients? So what type of transactions they do and what is being negotiated in the marketplace. And these are all different responsibilities of salespeople. Research analysts, as we looked at the org chart before, they are categorized by industry sectors. They provide company analyses, and they also recommend actionable and investable ideas to their clients. Now, this is not to confuse with another position, specifically in the equities division, which is a sales trader role. Now, a sales trader, by the name of it, means they sell and they also trade at the same time. Usually at many of the mutual funds, many of these mutual fund houses, they have their own execution desks. And these execution desks would place their orders with the sales traders of different equities team at different investment banks. And in addition to all these people structuring, we briefly talked about this already. The fancy name for that nowadays is financial engineering. So if you do structuring, you can also call yourself a financial engineer. And another term for that is the quants of a bank. So people who are very quantitatively oriented, who are also very good at disassembling and reassembling risk. Apart from what we call the front office people, right? Legal advisors and risk managers and credit officers also play a very, very key role in the daily operation of the bank. And if you look at all the people within an investment bank, very often I think there's an oversimplification of who are the revenue generators and who are the cost centers. And very often people try to put people into two camps. So either you are generating revenue, maximizing the top line, or you are being a cost center to the firm. So if you are a cost center, generally speaking, you don't want to have too much influence because it will mean that you have a high cost. But this is actually not so intuitive. As a salesperson, if you move up and you do not cover clients, very quickly you will become a cost center to the business also. I have also come across with some of the support function staff in either compliance or in legal and also in IT, who are very good at structuring deals, and they actually move into the front office and they become part of the revenue generation team. So even though the industry has this oversimplification of whether you are a revenue generator or a cost center, but in actuality, there's actually a very gray area between the two. Especially nowadays with tightened regulations and also many rules, compliance officers have played a very key role. They are now very indispensable in the business. Human resources staff are there to help you recruit people and also hire new graduates from universities. No matter what you do, I think one thing that is very clear is that the industry professionals, whether you are in the front office, in the back office, in compliance, on the client side, on the buy side, people often have this obsession with charts. So many of my team members, they learn to love charts. So if you look at this particular chart, it shows the graph of Citigroup share price over a period of time. It has the particular volume graph and the relative graph to other competitors, and also the different time series and volatility charts. So this is what I think a lot of people would look at, and many of the clients are very technical and also very intellectual. If you look at the types of clients who talk to the investment bankers and also have daily transaction with the sales and trading staff, we can group them into probably 8 or 9 different categories. So the most, I think, a traditional set of clients are the mutual funds. These are household names such as Fidelity, Franklin Templeton. If you just walk down to the street, you can buy their products. You can buy mutual funds. You can also participate in the growth of these assets. And these fund managers are usually divided up along product line as well. So either they are an equity manager, or they are bond fund manager, or they manage different sector funds. Then what do we do for them? Usually people from the sales desk and also from the research functions provide trade ideas and also execution services. And we also help them with industry access and conferences and also management access. Now, below the mutual fund managers, there's also a lot of not so obvious money managers, the pension fund managers. Here in Hong Kong, I believe one of the biggest pension fund managers is the Hospital Authority of Hong Kong Pension Scheme. And in Singapore, the Central Provident Fund provides a lot of pension schemes to their staff, to their citizens. In the US, the more traditional type pension managers are like the Texas Teachers. This is the Teachers Association from Texas, and also CalPERS. CalPERS stands for the California Public Employees Retirement System. And recently, I think in Asia particularly, the big asset managers also consist of sovereign wealth. Sovereign wealth means literally the money belongs to the sovereign country. So CIC from China, the China Investment Corporation, and also the GIC, Government Investment Corporation in Singapore. These are all big clients of investment banks as well. The joke that we often hear in Beijing is, where can you find the most investment bankers? It's actually at this particular building. So this is the Poly building, the headquarters of CIC in Beijing. Every day, every hour, every minute, I think when you are there, you will see somebody from either JP Morgan, from Morgan Stanley, Goldman Sachs, UBS, Deutsche Bank, or any other major banks. And increasingly, it's not just the global banks. I think a lot of regional players also have been circulating in Beijing. Now, we also have a lot of endowment clients, endowments and also the foundations. This is kind of like a halfway house between the for-profit fund management companies and also the not-for-profit universities. Harvard University Endowment has $28 billion under management. And this is a lot of money. This is actually bigger than many of the hedge funds. And the Yale Endowment and also the Stanford Management Company are also very big in the financial world. Even in the region here, NUS stands for the National University of Singapore. NUS also has roughly about $3 billion in endowment. Even though their objective is non-profit to provide education, but they have an objective of paying out roughly about 5% a year from their investable assets and use that money to fund the operation, to hire professors, to also conduct lectures, and also pay the staff of university. And you may or may not know that Li Ka-shing also has his foundation, and he's pledged roughly about a third of his total assets to this foundation, and he's seeing this as his third son. So you can do the math and you know how much Li Ka-shing is worth. So a third of his total wealth going into a foundation would mean a lot to the investment bankers who are in the sales and trading business. This is very similar to what Bill Gates and also his wife Melinda Gates have done. In the hedge fund world, obviously, this is one of our biggest clients in the sales and trading world. The global funds are the more active ones, the LTCM, the Farallon from San Francisco, obviously Elliott, Soros. These are all the big names from overseas. Paulson & Company was very famous during the GFC, the global financial crisis, and they famously shorted the market. So during the 2008 mortgage crisis, they were actually shorting the market. So Paulson himself reportedly, I think during the year 2009, had a personal compensation of roughly about $3 billion. Just one person, 1 year, I think with a very good trade. Private equity funds, we know about them, and the KKRs and also the TPGs of the world. And I forgot to mention that there are also many Asian-based hedge funds in the region. The Mount Kellett team was started by ex-Goldman people, Black Sling, and also Polygon. They were started by also famous traders from the prop team. Atradas was a very famous house based out of Singapore. They were trading equity volatility. Income Partners and Value Partners, these were two of the very famous local firms. Value Partners was one of the successful firms, and they are probably the only firm that is listed on the Hong Kong Stock Exchange. So if you want to look up their ticker, you can actually see Value Partners. What's the ticker number? I mean, some of you may or may remember. Yeah, so it's currently valued at roughly about 12% of their total AUM. That's the market cap, which actually is a very high valuation for a asset management firm. Recently, a lot of the private equity firms started doing business with the sales and trading desk because they wanted to do block trade. They have a big position and they wanted someone to take the risk and also absorb the entire position. And secondly, they also want to do leverage buyout, and they would come to the fixed income side of the firm and borrow money and also leverage up their position. Very quickly, let me just run through a few more client segments, and then we'll have also a case study. Insurance companies collect premium from their clients, and the more exciting thing about insurance business is once you collect the premium, then you invest the assets. So the investable assets would be put in bonds and also equities and other different types of securities. In the last few years, one of the very interesting things that insurance companies have done in the region is the so-called structured investment policy. And these all have a degree of embedded derivatives. So for example, if you walk into a bank, you could buy an insurance policy, 7 years maturity, you pay 100 on day one. For the next 7 years, say if I'm the policyholder, I die, then my beneficiary will get the benefit. But if I don't die, 7 years later, then I would get the principal back plus some kind of participation on the equity market. So in actuality, this is not really an insurance policy. This is actually an investment product. So this is actually an investment product that we will discuss a little bit later on, which is an equity participation note. Many of these insurance companies have these type of products, but they don't want the risk because should the equity market takes off in a few years' time, they would need to make the payment, and they would transfer the risk to many of our traders and also many of our competitors in the business. And central banks and government, obviously, we do a lot of business with them. This is the picture of basically PBOC in Beijing. This is the picture of the Fed in Washington, D.C. During the Asian financial crisis, HKMA also intervened and bought a lot of stocks in the market. Currently with QE3 and also a lot of the bond purchases program, the US Fed is also very active in the market. And those of you who had come to the YPS session, I think about 2 months ago, you probably heard from Anna Wong from Credit Suisse Private Banking. And private banks and retail banks, they have also been working with the investment banks in selling structured products and also different types of equity derivatives. Now, there's often the question of whether these private banks and retail banks, whether they are the clients of investment banks or whether they are the distribution channel of the investment bank. And it really depends on which firm I think you are in. If you are in a very big financial holding company where the private banking side of the business is more than half of the total revenue, then I think the investment bank would see the private bank as a client. They would see that as a client and they would service them just like they service the central banks, the insurance companies, and also the other hedge funds. But if you are in the financial institutions where the private banking side of the business is a smaller part of the business compared to the investment bank side, then these, I think, clients of the private bank are not, I think, being treated as their clients in a way. I think very often the private banking side of the business can be seen as a sales force or distribution channel of many of the products of the investment bank. And apart from using the intermediaries, I think there's also the direct transaction between investment banks and retail clients. Those of you who are here in Hong Kong, you know about the Hong Kong warrant market, you know about CBBC, you know about the ups and downs of the local equity derivatives market. You can buy a warrant directly from the issuer, and then you don't have to go through any private banking or intermediary channels. And this is especially true in Hong Kong, in Singapore, and also in Korea. So these are the clients of investment banks. But the landscape is getting more and more, I think, complicated. If you look at all the key participants in the global sales and trading market, obviously commercial banks such as Chemical, as you saw from William Wong's video, was becoming active. Investment banks are always there, hedge funds are there, and many financial entrepreneurs are also there. This is a business with actually a very low entry barriers. 2 guys with 2 math degrees and 4 mobile phones and 2 computers can easily get into this business. If you're good about trading, you can easily be in this business. Many people come in, many people also make a lot of money, and many people also fail. I think a lot of the corporations also get involved with the global sales and trading business. Imagine if you work for an oil company, either PetroChina or maybe CNOOC in the region here. You are in the energy business. You can trade energy. You can trade oil products. You can buy and sell oil futures. You can buy and sell electricity products. And this is exactly what Enron did, I think, back in the 2000 decade. And there was this very famous story about Enron energy traders and also the California electricity market. So in a very technical and academic sense, this following clip of a video highlighted how the Enron traders were arbitraging the California electricity market. So in simple layman terms, basically, this shows how a few very mathematically oriented traders were able to take advantage of the California electricity market.